Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Carson here with a breakdown of the action in today's session, Tuesday, August 22nd, where we saw stocks give up their gains. Ed, it looks like all eyes are still very much focused on Nvidia's earnings coming out Wednesday night.
Yeah, pretty much amazing singular focus on Nvidia earnings. Want to take a look at a couple stocks that may very well be influenced by that, Broadcom and ServiceNow, but also look at Baker Hughes.
Sounds like a plan. We'll do that, but first let's take a look at the major indexes. The NASDAQ today up less than 0.1%. On the downside, we have the S&P down 0.3%, the Dow down 0.5%, the Russell 2000 down 0.3% today. So the NASDAQ eked out a gain, but it came off of its intraday highs. We are on day 3 of a rally attempt, Ed.
Yeah, so in some ways it doesn't really matter. I mean, we had a nice bounce yesterday. We're still in a correction with a rally attempt that hasn't had a follow-through day. Technically, tomorrow could be a follow-through day, but I think we'd all feel more comfortable if at least Nvidia earnings are out of the way. You'd hate to see that follow-through day and then Nvidia tumbles 10% tomorrow night, and also Fed Chief Powell on Friday. So we'll just have to see. I mean, look, it was not great to see that dropping off. It's also the breadth was really weak again. No, not really weak. It was weak again. Yesterday was sort of stunningly weak given how much the NASDAQ rose. Still fairly narrow. So there's reasons to not be super excited about this rally attempt, but you just we're in a sort of wait and see how this rally, how Nvidia and how all this stuff shakes out in the next few days.
Right. And a follow-through day doesn't have to happen on day 4 of a rally attempt. It can only happen as early as day 4 of a rally attempt, I guess, except for one or two maybe very rare circumstances in the past. But it also can't happen on any old up day either, Ed. There are some specific requirements we will be looking for.
Yeah, you need to see first, you need to have volume on an individual index that's higher than the prior day, just to get some sign that institutions are taking part. Great if the volume can be really high. It could be below average, it's just as long as it's higher than the day before. And you want a solid gain. I mean, we're usually talking at least about 1.2%. It's a little bit, unclear. To judge, we sometimes shift that around a little bit, but around 1.2% or so. The stronger, the better to really power higher. It'd be great if we could be getting back above the 50-day line, on something like that.
Right.
But that's what you have to see. And not all follow-through days work, but you really don't get any sustained rallies without them. So you can have a follow-through day, and then if it fails, it usually will fail pretty quickly. But that's something that investors should be watching for. It does help that there's not a whole lot of stocks that were flashing buy signals the last couple of days. So it's another reason for investors just to be waiting.
And it does look like the NASDAQ hit some resistance at a declining tops trend line as well. But we'll have to see what this week brings and be ready for any scenario that unfolds, as we always are. And let's also take a look at the S&P 500. It remains below its major moving averages here that have converged, the 21-day and the 50-day, of course, still well above the 200-day, but these shorter term moving averages that we've been keeping an eye on closely, closing about 1.5% below the 50-day line as of now. And here's a look at the Dow, Ed. So we are seeing it coming right back around to this area where there's been a lot of congestion, just over 34,200 and change. So is it a concern to see it coming back into that level?
I mean, it was concerning to see it come down through that level. I mean, when it came down right now, it sort of feels like, the Dow certainly isn't really rallying. In fact, yesterday, I think it fractionally undercut the low of Friday. So today is really only day 2 of a rally time. And if it undercut again today, which I didn't check, then we're back to 0. So this one seems the weakest all of a sudden, which had looked strong just a week ago. Things can change pretty quickly. So yeah, I mean, there's a lot of little resistance, little support that we're seeing on all these indexes. Not decisively, I mean, right. It's not a decisive break either way.
And let's also take a look at 0RUS. This is the Russell 2000. A couple days ago, finding support at the 200-day line, but still hanging out around there, not really bouncing just yet.
No, this one, yeah, that would be a lot further below the 500, the 50-day than a lot of these others. Definitely showing weakness. Definitely a reflection of the weak breadth.
Well, that's a great segue, Ed, to take a look at RSP, the equal weighted ETF of the S&P 500, down 0.4% today, outpacing the S&P's 0.3% decline.
Yeah, so not a huge underperformance, but then yesterday it was fractionally lower when the S&P had a solid gain. So they're not seeing much bounce here. It looks a lot like the Russell in the sense of being a fair amount below the 50-day line and just holding on to the 200-day line. The RS line for this is, again, approaching some of the lows that we saw a few months ago. So just narrowing rally once again. Obviously, we're not in a rally, but to the extent that we have breadth, it's narrowing.
Rally attempt. And now let's take a look at 0TNX, the 10-year Treasury yield, closing a little bit lower, but a really strong gain we saw on Monday, Ed.
Yeah, and so we're right at 15-year highs. This is definitely one of the major reasons pressuring it. So we're going to look at Nvidia, and all eyes are on it. But this is another big factor. I mean, this is a big reason why the market has come down, is because of this really sharp rise in the last few weeks.
Yeah, look at this RS line. If you want to take a look at the relationship between the S&P's performance and this, I mean, that'll show you right there.
That's absolutely true.
All right, let's now take a look at a couple of sectors. Here's XLE, the energy patch, down about 0.8% today. But the silver lining, Ed, may be that we are starting to form a little bit of a handle or a sideways trading range here for a lot of these stocks that have had nice moves over the past couple of months. A new opportunity to set up.
Yeah, I think that's a great way to put it, because they're still holding that 21-day line. Still seems to be trending up even as it has this handle, and they're going to follow oil prices. And oil prices are taking a breather, once again, just a little bit, and that's fine. Still holding that 21-day line. So as oil prices, so will this sector as well.
And XLI, industrial stocks, reversing a little bit lower here today. We are eyeing potential setups in this area as well, Ed.
Yeah, there are. And look, it wouldn't take much for this to bounce back. And obviously, it would not take much for this to go back and sort of go back into its so-called base and a lot of stocks in this ETF.
And XHB, let's see how home builders are doing. Failing to recover after that steep decline, at least so far.
I mean, yeah, yields keep rising. I mean, that's really hard. I mean, affordability has come down a lot. And yeah, there's been a limited supply, which has been helpful since there's not many existing home sales. But at some point, I mean, they held up very well on it. And then finally, it's sort of like, okay, this is an issue. And we'll see how things go. Toll Brothers has earnings tonight. I don't know if they reported. I don't think they have. I'm not seeing it really moving yet. But so that'll be interesting. But it's just, one of many that's coming out in the next few weeks.
Yeah. And Nvidia reversed lower today. So let's see what kind of impact that had on SMH, coming right up to the 50-day line and getting rejected there for now, Ed.
Yeah, and that's important. So again, hasn't broken the downtrend really, but it's just hitting resist. It's just, again, all these things, they found support in a mini rally in amidst a short-term downtrend. There's a lot of countervailing things. Big action the next couple of days, obviously.
And let's also take a look at IGB, the software sector, reversing fractionally lower, hitting resistance at the 21-day line. Another area of the market we will be closely watching for that ripple effect of what Nvidia says, because as you pointed out, it's got a lot of partnerships. There's a lot of applications for so many things that touch a lot of different areas of technology and anything that is AI related. And a lot of software companies are likely to feel a bit of an impact, one might imagine.
Yeah, and we're also going to have Snowflake earnings tomorrow night as well. So that's going to also affect software. Again, just everything's very critical, especially on the tech sector area in the next day or so.
Let's now take a look at AVGO. This is Broadcom, like SMH, hitting some resistance at that 50-day moving average, down about 1.1% today. Volume was light and lighter than yesterday's nice pop on volume there. But this is a stock setting up. Maybe if we see a positive reaction to Nvidia's earnings, this one could be looking pretty good, but that's an if.
That's an if. It's an if. And there's other positive. The relative strength line is holding up well. So, I mean, it's, even though it's pulled back, it's pulling back only with the market, after a big advance. So that's positive. On the flip side, if things go negative, it's going to be hitting resistance right at the 50-day line. You could see this as a possible short. Now, this hasn't been a laggard like some others. You might find others that are better, but I'm just saying it's one of those situations where it's literally at a point where it's almost flashing a buy or a sell or short signal. So and this one has earnings next week as well. So that's something else to keep in mind. Even if it does pass, even if Nvidia looks fine, Broadcom may end up having some negative news.
And Ed, I wonder for those who got into this stock on that last breakout, or maybe they were buying after this little bit of tight action here in early June. I'd imagine traders who bought at those two different spots would maybe be handling the stock differently, but looking at a weekly chart here for Broadcom, if you look 3 weeks ago now, it did close 3.6% below that 10-week line for the first time since that breakout. Although, traders who were buying there still have a pretty big profit cushion. But if you were buying above, 800, it seems like you don't really have a lot of cushion there to be holding. And that 10-week line sell signal is one that we really do like to pay attention to.
Yeah, and that's a big sell signal. And when you get like not much cushion, Nvidia, then Fed Chief Powell, and then Broadcom earnings itself, there's a lot of reasons. And maybe it'll all go great. Okay, it certainly could. But there's the potential for, we've seen plenty of 15, 20, 25% drops from stocks that have looked pretty good heading into earnings. So
even had great reports.
Some of them have really good reports. Yeah. And sometimes it's their guidance, this or that. And so it's just, so there are a lot of risks. And so if there's not a much cushion, you need to be taking that, a lot of the risks, and just have portfolio management on this.
And now let's take a look at software stock ServiceNow. It managed to close up on the day, up 1.3%, and the closing range here just shy of 70%. It looks like it's setting up a potential trend line entry. As you mentioned, we not only have Nvidia, but we have Snowflake. So yet again, this is one that I guess could go either way. If it gets rejected here, a potential shorting opportunity, and that is potential. And if it clears this trend line, some traders may decide to take action on the long side.
Yeah. So, I mean, just it goes on and on. I know we're repeating ourselves, and that's with all these sectors and these. But look, the stocks follow the market, and they follow these things, and so it's not a surprise to see some of these things going on. You're right; they're finding support at some levels from a couple months ago. The Nasdaq did, Broadcom did. A lot of these things are doing that. So maybe it finds support, or maybe this is where it rolls over. Like maybe don't try to predict what the market or stocks will do. I mean, you can play out scenarios, and that's fine, but you also have to realize that there's just a big X factor out there that we have no idea what's going to happen, a day from now.
Yes, and we'll be ready to act as necessary. Let's take a look at BKR. This is Baker Hughes. Really impressive tight action right around that 35 level and the 21-day line. And if you didn't think the action on the daily chart looked tight, check out this weekly chart here, Ed. The stock is working on a 6th-week tight.
Yeah, that's pretty amazing, given that oil has made some moves in there. It's the relative strength line continues to climb during that era because obviously, the market is not doing so great. There's that. You can look at that tight pattern. That buy point from there, the top of the tight, is also a handle to a large consolidation, this mammoth consolidation here. So that's definitely, if it clears just even some of the levels, the short-term levels from last week, that's probably an early entry. But even if you wait for the traditional buy point, not too bad in terms of extension there. The moving averages are catching up. Obviously, the 21-day has caught up. 50-day line is catching up. You wouldn't mind more on that, but it's
Right.
definitely that's helpful, because when it started this tight pattern, it was really extended from that level, and now it's holding up. And so the energy sector is one that's a little bit separate from other areas, and so this one might work out even if the rest of the market is struggling. So I definitely investors should be looking at the energy sector closely.
Yeah, really solid fundamentals here. Look at these annual earnings growth numbers, 99 composite rating. So that, if you boil it down, you just look at one thing. I mean, 99 composite rating, that's pretty good. And the action, not only is it tight, but it's been quiet and some nice volume before that coming in on the upside. So if we can just maybe see that, like you said, 50-day line catch up or get a little bit more of a shakeout, great. And then it moves higher. But if this one starts to make a move, could be interesting. We'll have to see.
Yeah, absolutely. And yeah, if this market looks a little better, this one definitely could be one of those that does very well in it.
All right, one to watch. Well, thank you, Ed, and thanks everyone for tuning in. We will be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live, for all the details on that. We'll see you there, and we'll also see you right back here tomorrow at the close. We'll give you that hot take on Nvidia's earnings reaction. Maybe there will be a little movement after the close when we're still doing the show, but we definitely have you covered Thursday morning. So lots to come this week, and we'll see you there.